minutes to talk about the selling and administrative expense budget. So all costs incurred in every area of the value chain except production need to be expensed as operating expenses in the period incurred. Thus, all research and development, design, marketing, distribution, customer service costs will be shown on the operating expenses budget. Some operating expenses are variable based on how many units are sold. Other items to include would be commissions paid as incentives, shipping costs, and finally, the company knows that not all of the sales made on credit will eventually be collected, so we need to subtract the amount of bad debt expense. Other operating expenses are fixed and they will stay the same each month, even though sales volume fluctuates. Royal has a variable and fixed component to its selling and administrative expenses budget. The company estimates that the variable selling and administrative expenses will be 50 cents per unit sold, and then fixed selling and administrative expenses are estimated at $70,000 per month. Of this amount, $10,000 are non-cash expenses, which are primarily depreciation. So let's go ahead and prepare that budget. So first of all, we would have to return back to our sales forecast to see what our budgeted sales were for each and every month. And then we multiply that times the 50 cents per unit variable rate. And to our variable expenses, then we go ahead and add our estimated 7,000 fixed selling and administrative expenses to get total selling and administrative expenses of $80,000. Then we would go ahead and subtract the fixed expenses, the non-cash portion of the fixed expenses, to arrive at cash selling and administrative expenses for April. So maybe take a couple minutes and see if you can fill out the entire schedule. Again, I'll give you a hint. The budgeted sales for May are $50,000. June will be $30,000. So the total for the quarter is $100,000. And here we can see our selling and administrative expense budget completed. Again, you just take sales times the variable rate, gives you variable expenses. Add your fixed expenses of $70,000, which don't change for any month, and then subtract the non-cash expenses, which in this case were depreciation. And then we can add across everything to determine what exactly the cash selling and administrative expenses would be for the quarter.